Good morning, everybody.
Just exposing my humanity in front of everybody, right? All
That's
right.
right.
Take it away, Anita.
Thank you. Well, good morning, everybody, and I appreciate you joining this. I'm going to go through these slides about the Alabama Able Savings Plan, and I do hope that you find it is some very useful information. This is a great program, and our biggest obstacle is awareness. There are not a whole lot of people that know about this program, and it really can be very helpful and sometimes even life-changing for some people. So I'm going to start the presentation now. I'm going to turn my video off. Sometimes that can interfere and make me slower or hang the internet up a little bit. So, but I'm here, and at the end, if y'all have any questions, I will stay around for as many questions as you have. So what is Alabama Able? It is a savings plan that allows people with disabilities to save money without jeopardizing their benefits, such as SSI, SSDI, Medicaid, SNAP, FAFSA. This cannot be counted as a resource. It was signed into law by Congress in 2014, and Alabama was actually one of the first states to open an ABLE program. We were, I think, seventh in the country to start. So we signed into law in 2015. We did start a program in 2017. It was called Enable Alabama. We did change and start a new program 2 years ago called Alabama Able Savings Plan. Enable was a partnership with Nebraska. It was the quickest way for us to get up and running, but we learned a lot and thought of things that we might do differently. So we branched out on our own. I mention that because if you ever hear of anybody that has an Enable Alabama savings plan, they really ought to consider rolling over to us. And I'll go over some of the reasons, but the biggest two are our fees are lower, and you get a state tax deduction on your contributions if you have the Alabama Able plan. But if you have the other ones or any other plan in the country, you don't get that state tax deduction. It's operated by the Alabama Treasurer's Office, and I am the director of the savings division. So I do college savings and the Alabama Able savings. So national numbers, just so you can know, currently there are 46 states and DC that have started ABLE programs. We're actually close to 138,000 accounts now nationwide, and over 1.25 billion is invested in ABLE accounts. The average savings in ABLE accounts are 9,132. As far as Alabama numbers, we just opened 2 years ago. None of the accounts that were opened with an ABLE were able to be our accounts. So we started brand new. So we are right at 800 accounts, and that average savings is about true. It's around 8,000 for the Alabama accounts. So we just have a lot of work to do to get the message out that these accounts, that they exist. So who can open an ABLE account? To be eligible for an ABLE account, you have to have developed your disability prior to age 26. So you can be 99 years old and open up an ABLE account, but your disability has to have occurred prior to age 26. And that doesn't even mean that you were diagnosed. It could have happened and you were diagnosed at 27, as long as there is something showing that your disability occurred prior to age 26. Once that is established, then you either have to be entitled to SSDI, entitled to SSI based on blindness or disability, or have a disability certification meeting specified requirements from a doctor. None of that has to be given to us. So when you're opening up the account, it's going to say, did your disability occur prior to age 26? You will click yes or no. If you've clicked yes, then it's going to take you on to which of these three things are you is also true. So you're self-certified, not turning anything into us. The good news about the age 26, and really the good news about ABLE, Congress really likes these accounts. They do see that they are a really good resource for individuals with disabilities. And so this past December, they actually passed the ABLE Age Adjustment Act. And so starting in January of 2026, that age of 26 is going to be raised to 46. That is going to include a ton more people that will be eligible for these accounts. It'll be, the veterans were really behind this, head injury, MS, ALS, lots of different disabilities happen later in life. And so this will help with those individuals. So who owns the ABLE account? Well, unlike a trust, the actual individual that has the disability is the owner of the account. So when you log in and you're opening the account, they are the owner. If they're able to open the account on their own, then that's fine. They'll, put themselves as the owner, put in all of the information, and the account is open. But if they do need someone to be on the account with them, we call that an authorized legal representative. That's an ALR. That could be a POA, a rep payee, guardian, conservator, parent. We also have a POA on our website that people can download and use specifically for this account. It can't be used for anything else, but it does make it easier if you don't have guardianship or conservatorship paperwork. And the individual is able to sign saying that they want you to be the power of attorney, then we do have that form. Only one ABLE account is allowed per eligible individual. Unlike a lot of other accounts that the IRS is over, such as IRAs or college savings, you can have multiple accounts, but ABLE, you can only have one. So if you live here in Alabama and one is opened, and then you decide to move to California and you don't want to keep the Alabama account, you can open up the California one, but you will have to close ours within 60 days or there'll be a penalty. What can ABLE accounts be used for? They should be used for qualified disability expenses. There are penalties if not, and I'll go through those in just a little bit, and I'll go through what the disability expenses are. Documentation to support these expenses, you need to keep that. What we tell everybody is, have you a folder for 2023, and anytime you take money out of the ABLE account, just write down, have a receipt, do some kind of documentation showing where this money was spent. You don't have to turn it into us. You don't have to get permission to sign to use the money. We're just telling you to keep that for your records. So this is a list of the qualified disability expenses, and basically it is everything. It is anything you can think of with education. So computers, books, tuition, anything that could help you, a tutor, basic living expenses. Well, that would be, clothing, rent, mortgage payment, doing, food, doing any kind of improvements to your home. Transportation, that could be public or modifying a car, doing an Uber, airplane, housing and rent, personal support services. That's, hearing aids or a service dog. Actually, our first ABLE account owner that opened an account, that is what she was saving for, was a service dog. She had one currently, and it was aging out and wanted to just be a dog and relax. And so she needed to get a new one, which was around $19,000. So this is what she used to save. Employment training and supports, assistive technology and related services, financial management, legal fees, funeral and burial expenses, healthcare prevention and wellness. And then if it doesn't fit into one of those categories, then we actually have a pretty broad category that says other expenses to enhance the account owner's quality of life. So that could be a vacation. That could be, pretty much anything you can think of. People ask me, what would you say is not a qualified disability expense? Well, what I can think of right offhand is if the money was used for someone other than the person with the disability. Okay, that would not be a qualified disability expense. So pretty broad on what you can spend your money on. Contribution facts. just $25 to open up the account. That's the initial deposit amount. And then once it's open, it's just $10 for each deposit after that. So we make it very easy and affordable to try to start saving if you are saving for the future. But also this is a great way to keep from spending down every month. If you have individuals that are not using all their money and you're having to spend them down to keep them under that $2,000 limit, this is a great place to put that money. Every year we're given an annual contribution limit, and this year it is 17,000. That can change every year. So last year it was 16, and I believe the year before that it was 15. That number it goes by the gift tax exclusion amount that the government sets annually. So we let everybody know through their statements, online, on our website, what that amount is every year. So we can't accept any more than that $17,000 in annual standard contributions. There is one exception though. You can actually put up to $13,590 additional to that $17,000 if you qualify for able to work. And I will explain that on the next screen. So I think I told you on the second screen that these are excluded. Nobody can count these. None of the federal programs can count these. The one exception to that is SSI benefits. You can only put up to $100,000 in these accounts, and then SSI will suspend your benefits. So we will let you know. We start sending out notices saying, hey, you're getting close to the $100,000. You need to do a withdrawal, spend down, so that you don't have your SSI benefits suspended. If you do go over the $100,000, once you get back below, then your SSI benefits will, they'll start them back up. If you're not receiving SSI benefits, then you can actually put up to $475,000 in this account. So it's a good place if you had some life insurance proceeds or on top of the savings that you've been putting in there. But the thing is, you have to remember, it's only $17,000 per year that you could put into the account. And then how do you make the deposits? Well, they can be made via mailing in a check to us, automatic deposit, electronic funds transfer, payroll deduction, direct deposit, basically any way that you put money into your bank account here at your local bank, same ways here, except for you cannot walk into a bank to do it. These are only online accounts, so there's not a building that you'll be able to walk into and make a deposit. So this is the able to work that I was telling you about. This was passed about 3 years ago to enhance able accounts, and to qualify the able beneficiary, so the person with a disability, they have to be employed, but they're not receiving a retirement plan or contributing to a retirement plan at their employer. And their employer can't be contributing either. So if they're working and they don't have a retirement plan, then they can save an additional $13,590 or the total of their wages, whichever is less. So let's say that they made $5,000 this year, then they could put up to $5,000 additional to that 17,000. So now their total is 22,000 that they were able to put into it. So only the person with the disability can contribute more through able to work. Remember, it's only that person that qualifies for that part. And when you log in and you're making your deposits, you're going to code the deposits as either standard, so that would go into that $17,000 bucket, or able to work. Anytime someone is working and you're making a deposit and it's from their working, you want to put it into able to work so that they could go over that $17,000 limit if needed. Also important to note, any wages added to able are not protected from income limits. This is just protecting the resource limits. So what are the deposit options? When you open up an able account, it's basically a plan. Then within the plan, you have to decide, where am I going to put each deposit? So each time you log in, it's going to ask you, where are you going to put the money? So if we do have a cash option, it's FDIC insured savings account, and it's earning right at 5% now. So it's earning really good. That would be the option if you don't want to lose any money, don't have any kind of toleration for your balance going, or tolerance for your balance going up and down. And if you want to be able to get to that money at any time for short-term expenses. If you are saving for the future where you're wanting to save for greater than 3 years. So let's say a parent that may be saving for their child for college, or maybe when they're not going to be here, then you may want to look at our investment options. We have a conservative, which is going to be more bonds than stocks, then a moderate that's almost equal stocks and bonds, and then aggressive, which is mostly stocks. So to put your money in there, yes, you're going to have to, the stock market or the bond market can go up and down, so your balance can fluctuate. But you can log in and see what our investments have been doing. And even with the turmoil in the stock market and the bond market, these have been doing very well. So they can be earning greater than that 5% that you would have in the cash option. Account owners are allowed to change their investment options up to twice per calendar year. So let's say you put money in the aggressive, and then you were like, oh, I don't really, that's not for me. I just want to move it to the cash option. Well, you can do that, but you can only do those kind of changes twice per year. And then when you log in, I told you you'd have to make a decision, but it's going to ask you how you want to put the money in. And you can divide it out among the options. So for example, let's say you're logging in and you have $100. You could say, well, I want to put $50 in the cash option and $50 in the aggressive investment option. The next time you log in, you have $100. Well, I want to put all $100 in the conservative option. So anytime you log in, you can do any kind of combination of deposit. It doesn't have to be the same, and it doesn't all have to go into one of the options. So who can contribute to an account and what funds can you deposit into an account? I put this slide on there, but and I list out things, but really it's anyone. The account owner, family, friends. If I know you and you have an ABLE account and I want to put money in it, I can put money in there for you. And then what funds can be deposited into the account? Earned income, unemployment funds, economic stimulus payment checks, rollovers, small inheritance, small settlements, and Social Security benefits. So once you get the money in there, how do you access it? Well, when you open up the account, it's going to ask you to link an existing bank account to your ABLE account. You do not have to do that, but I would highly suggest it. It is the quickest, easiest, and cheapest way to manage your account. All transactions that you do where it's linked to your existing bank account here at your local bank, those are free. So there's no charge to move money from your bank account here to your ABLE account. And then when you need money, you log in and you move it from your ABLE account back to your checking account here at your local bank. So that's the way I would suggest that you do it. You can also mail in paper checks. You can request paper checks for withdrawal, and we do have a prepaid card, which is a really good option for some people. But those two, the paper checks for withdrawal and the prepaid card, they do have fees. So this is the debit card, and I will tell you this card is perfect if you have it's perfect for a lot of people, but I always think about this one instance where if you have a child that may be transitioning out of high school to where they're gonna get a job, or they need some more independence, this card is great for that. It gives you, it's just like any other prepaid debit card, but with a lot more control on it. So you log into your ABLE account and you would move money from one of those accounts that you have it in to the prepaid card. So then now the money's on the prepaid card, and then you could give it to the individual and they can go use it. But what you can do is you can put uh, you can put things on it to where it says, hey, it can't be spent at at Amazon, or it can't be used at a liquor store. It can't be used more than $50 a day. Or if they're going to Target, they can only spend $25. And those little rules that you put on the card, those are instant. So when you log in, you're setting those rules for the card, but then let's say you need to remove one for the person because they do need to go to Target and spend $100. Well, you can log in and now take that rule off. You can get alerts that let you know that the account is going low in the balance or where the money has been spent. It's just a really good way to maybe give someone some independence, or let them learn how to use their card with very low risk. So tax benefits. When you put the money in, it's tax deferred while it's in your account. And then as long as you use it for a qualified disability expense, which I went through those on an earlier screen, which was everything, then it's tax free. So if you have it where it's earning, the 5%, or you have it in the longer term investments, when you take that out, you're not going to pay taxes on those earnings like you would if you had it at a bank, in a bank account. Contributions up to $5,000 for a single filer and $10,000 for joint filers. Those are deductible on your Alabama state income tax if you're an Alabama resident. So that's a really good thing. And that's for anybody. Like I said earlier, if you have an ABLE account and I want to make a deposit into that account, well, that amount that I deposit, I can put that on my taxes, and there'll be a tax deduction for me. Remember earlier, I said you want to make sure that you use these for poor qualified disability expenses. But let's say for some reason you did go in and say it's a non-qualified disability expense. Then what happens with that is the earnings portion of that withdrawal is subject to federal and state income taxes and an additional 10% federal penalty. Medicaid reimbursement. You need to let Medicaid know that you have an account. They know that it is, that they cannot count that as an asset for you. So make sure that you give them a statement or call whoever is your person that you talk with at Medicaid. The thing also to know is that if the account owner receives Medicaid, assets in the account may be subject to Medicaid reimbursement upon death. I don't know of anyone that has had that happen, but it is allowable by federal law that Medicaid can come back and get the money out. Two things to note about that. Before they can do it, all assets in the account first go to any outstanding payments for that person. So whether it's funeral costs, hospital bills, rent, anything that they owed prior to their death, that gets paid first. Then if there's money left over, then Medicaid could put a claim on that. The other thing to note about that is they can only claim the amount that Medicaid paid for net any premiums while the ABLE account was open. It's kind of a little bit confusing, but let's say you were receiving Medicaid benefits for the past 10 years and you only had an ABLE account for 3 years. They can't come back for that whole 10 years. It's only the 3 years that you had the ABLE account. So what are the fees? It's a $35 annual fee, lowest in the country. $8.75 a quarter is how we charge. So it just comes directly out of the account. If you have one of those investment options that I talked about, those are going to have asset-based fees. Every investment does. And whether you get one at a bank or an investment broker, whatever, they're going to have fees. Our fees are 0.30% to 0.35%. And so what would happen is, let's say you have $100 in the ABLE Aggressive, and it earned 10% for the year. Well, we're going to have to deduct the 0.35% from that 10%. So now you've earned 9.65% instead of the 10. So it's not something you have to pay. We're just going to take it from your earnings that are in that particular investment. There's a paper statement fee of $10 a year, but if you choose to just get it sent to you electronically through your email or download it on the system when you log in, then that's completely free. Paper checks are $2.50 per disbursement, but again, remember, there's no charge if you just log in and move it back and forth from your local bank account to the ABLE account and vice versa. And then the prepaid card is $5 a month. So that might be something you open up the account, you don't think you need the prepaid card right now, you can always open that up, use it. Let's say that after a year, you don't want to use it anymore, you can close it back out. But while you do have it, it is $5 a month. Online gifting page. This is a really good thing. We have a lot of Alabama ABLE account owners that are taking advantage of this. Once you open the account, let people know that you have an ABLE account and you can share your gifting page. And this is a great way for people to give money for birthdays or Christmas. Because remember, again, they get a state tax deduction for it if they're an Alabama resident. And you're getting the money and it's going directly into the ABLE account where it's protected. So we do have a program called the Entity Authorized Legal Representative, and we have a lot of organizations throughout the state that take advantage of this, such as like the ARCs, Volunteers of America, where they are overseeing funds for individuals. So what they do is the business or the organization is the entity. And so they only have to open up one account all the way through. And then after they've got that first account open, we can just add people. So if you're an organization that's over 100 people or 10 or whatever the number is, it's a really good and quick and easy way to manage all the accounts. It has one login, one password, so you're not having to keep up with that for each individual. If you're interested in this, or if you're part of an organization that would be interested in this, you do have to contact me and I get it set up for you, but this is a really nice program. So we are winding down and I'm just going to kind of do some reminders or some recaps. So with all that information, why open an ABLE account? It's a way for people to save money and keep all their benefits. They don't have to spend down, so they could have more than that $2,000 and not spend down on things that they really don't need. No federal or state taxes on the earnings while it's in the ABLE account, and it's tax-free once it comes out. The state tax deduction that I've talked to you about. Easy online enrollment and account management. I will help people open up their accounts, but it takes no more than 15 minutes. It's very easy. And even if you're not receiving benefits, it's a way to save tax deferred for long-term wants and needs. And then again, very low fees. So this is our website. It's www.alabamaable.gov. There are other programs out there that are paying a lot of money with Google, and they will, if you Google Alabama ABLE, their programs will come up. So always make sure that you're at the alabamaable.gov website. We've had a lot of people open up the wrong program and then have to get them moved back to us. But at this site, I would definitely, out of all the things you can look at besides opening your account, I would tell you to go to our FAQ section, the frequently asked question. That has a ton of information, just minute little information that I don't have time to go over today, but you may be thinking, or a situation that may come up, it covers those. And then there's all the numbers that we went over today that you need to remember. $25 to open the account, $10 after that, $35 annual fee. This year's annual contribution limit is $17,000, $100,000 in the account before SSI benefits are impacted, and then the $5,000 state income tax deduction per contributor. And then this last screen has my contact information. So it's got my name, my direct phone number, my direct email address, again, our website, and our call center. And our call center is open until 7 o'clock every night. So if you're, working parent or, unable to call during business hours, then we are there till 7 o'clock to help anyone. And that is my presentation. Anybody have any questions?
Thank you so much, Anita. That was some really great information. We do have a few questions in the chat. If you'd like, I can go ahead and read them out to you. Kate was asking that you noted that you don't know of any that Medicaid claimed remaining funds upon beneficiary's death. So what did happen to those funds? Does it go to the trustee or the guardian?
Yeah, it goes to whoever is over those funds at that time of the death. So yeah, they're able to just withdraw it. So if let's say there was, $10,000 in the account. Well, if they had $8,000 in burial costs and $2,000 in hospital bills, then that money's going straight to whoever is taking care of that individual and paying those last expenses.
Okay. And then there's a part 2 to that question. Is it possible to have an ABLE account even if the beneficiary no longer lives in the state? Is the recommendation to open in the state that the person lives in? I have an individual whose family lives here, but is planning to move to a program in Florida. So we weren't sure if it was a good idea to start him on an ABLE account.
Yeah, so, okay, Florida, you'd have to look at every state and see. So if you are the one that is going to be putting the money in the account and you live in Alabama, then I guess I would probably suggest that you open up the Alabama account because you've got the state tax deduction. But if you're living in Florida, then they may have their own tax benefits that you can look into. It might help. I do know that Florida is one of the states that you have to be, they only do it for their residents. So Alabama, you can be a resident nationwide and open up our program, but Florida, you have to be a resident in Florida.
Okay. Does anybody else have any questions for Anita?
Jenny, I would be glad to share my PowerPoint if you want me to send it to you. If there was people that weren't able to join, or if people did want to look at it again. And then y'all have my contact information. So if anybody has any questions after this, didn't want to speak up on this or something comes to mind, I'm here. So please give me a call. I would love to help you get one of these opened.
Thank you so much, Anita. And also, if anybody who joined late or maybe just wanted to watch the presentation again, this will be posted on our alabamarespite.org website under caregiver education. I believe is what it's called, caregiver education recordings. So they can also get that information there too. Because I know looking at the slides is useful, but sometimes it's nice to hear the information as it's being presented a couple times to, at least for me, to get it solidified.
There's a lot of moving parts to these accounts. Yeah.
So if anybody is interested in Anita sharing the slides, please indicate that in the chat so that I know who to send it to. When she gets it to me, it probably will be, sometime by the end of the week, I'm sure. But again, that the recording will be on our website, usually within 24 hours. And also, I know I mentioned a million times, but we also had people kind of trickle in late. If you're here and you have not yet put your email address in the chat to take attendance, please do so before we log off. So that way I know that you are here and then I can send you your post survey. So any questions before we end? I don't want to rush anybody. I also want to give everyone the opportunity if they have something to say. Okay, Donna would like the slides in the audio. Okay. Well, thank you so much, Anita, for taking time out of your day this morning to share this wonderful program with us. It's really fascinating how many benefits this program offers for people who are looking to save some money, especially as caregivers. As much as we can prepare, the better, right? So this is really great information. I hope everyone takes advantage. of the information she's presented. And again, if you need to, if you have any questions that maybe come to you later on, like Anita said, take down her contact info and contact her, ask those questions, get that clarification. It never hurts to get, you know, your questions answered, even if it's not something you choose to do. More information, the better, right?
Absolutely. Thank you.
You're
Jenny, thank you
welcome,
for this
Anita.
opportunity, and all of you, thank you for joining. Just help us spread this word for everybody. I appreciate it.
Of course, and I'm so happy that you all came on today. We had quite a large crowd, and so I'm excited that this information has gotten into so many hands.
Thank you.
All right, well, everyone have a wonderful Tuesday. Stay healthy, stay happy, stay well. Okay, carve out the rest while you can, and stay cool in this heat. All right, goodbye, everybody.
Bye, y'all.
Bye-bye.